Welcome back to RealPage Economy Express. The August jobs report showed clear weakness, inflation remains stubborn, and housing is losing steam. Let's break down what the latest numbers are telling us. We will kick off with construction. In July, U.S. construction spending ran at a seasonally adjusted annual rate of about $2.14 trillion, essentially flat from June and down 2.8% from a year earlier. Residential projects pulled back, but public construction helped keep overall spending from slipping further. Housing prices are slowing too. The S&P Totality Case-Shiller Home Price Index showed a 1.9% gain nationally in June. The 10-city composite rose 2.6%, and the 20-city composite gained 2.1%. Still positive, but clearly losing momentum. Pending home sales followed that trend. The NAR Pending Home Sales Index slipped 0.4% in July, though it was still up 0.7% from a year earlier. Gains in the Midwest and South were offset by declines in the Northeast and West. Mortgage activity also weakened. The Mortgage Bankers Association reported applications down 1.2% for the week ending August 29. Purchases cooled, refinancing pulled back, and the 30-year fixed mortgage rate stayed in the upper 6% range. On the broader economy, GDP got a lift. The Bureau of Economic Analysis revised second quarter growth upward to 3.3% from the earlier 3%. Business investment, especially in AI and technology, teamed up with steady consumer spending to push the numbers higher. But inflation hasn't eased much. The core PCE index, the Fed's go-to gauge, rose 0.3% in July, leaving the year-over-year rate at 2.9%. That's right on forecast, but still above target. Confidence is slipping. The Consumer Confidence Index dropped to 97.4 in August, down from July's 98.7. Both current conditions and expectations move lower. Labor demand cooled again. The JOLTS report put job openings at 7.2 million in July, well below the 9 million plus level from last year. Quits remain muted, showing fewer workers are willing to take risks. That slowdown carried into August's employment report, which showed just 22,000 new payrolls, far weaker than forecast. The unemployment rate ticked up to 4.3%, while average hourly earnings rose 0.3% in the month and 3.7% over the year. Healthcare added jobs, but losses in manufacturing, mining, and government weighed on the total. Now, with August jobs report confirming that the labor market is slowing down drastically, and with Chairman Powell's late August Jackson Hole comments hinting at a possible rate cut, it is now almost certain that we will see a move at the September FOMC meeting. The only question now is whether it will be a 25 basis points or 50, and that uncertainty will keep markets on their toes. That's all for now. We'll see you next time on RealPage Economy Express.